All right, it's time we get started. All right, well, welcome everyone on the line and welcome Aaron. Thank you all for joining this Facebook Live event. We know these are incredibly troubling times in so many ways for so many people, and there are lots of landlords and tenants trying to figure out how to work through these uncharted waters. And today we're going to talk through this with one leading retail group and how they're addressing this. My name is Jerry Frank, and I'm the co-founder and CEO of STRATAFOLIO. STRATAFOLIO is a cloud-based software solution that provides asset management and property management as a solution. And nearly 90% of the assets in our platform are from commercial real estate assets. So this means that a large portion of our client base is dealing with the impact of COVID-19 on their. Today we have with us Aaron Schoen, who is the Vice President of Asset Management and Investor Relations at Starwood Retail Partners, and he's based in Chicago. Starwood Retail Partners is the 5th largest manager of regional malls in the US, and they've made a name for themselves by reinventing the retail experience in the mall space. Welcome, Aaron.
Hello, glad to join today.
Yeah. So the format for today is going to be 20 minutes of discussion. We've talked to several people across our portfolio and across the nation to find out what's on their mind. So we're going to talk through some of those questions, and then we're going to move on to some Q&A from the audience. So why don't we just start with, Aaron, tell us about how things are going right now with your tenants. What are they saying at this point?
Yeah, and maybe before we jump in there, I'll give you a little bit more background on kind of Starwood Retail, just to it can provide a little bit more context for the viewers. So Starwood Retail Partners is a subsidiary of Starwood Capital Group, and we are a fully operating asset management and property management platform. We do leasing, development, accounting, kind of fully vertically integrated organization. We own 30 malls across the country, over 350 employees, and I'm really focused on our asset management and investor relations. So it's a wide range of responsibilities, from working with leasing and development to analyze merchandising initiatives to collection strategies and kind of the times that we're dealing with now, as well as focused on working with our investors on the value of the properties and how do we maximize value. Even in times of today, what can we do to better position ourselves to come out of this a bit stronger?
Yeah.
So back to the first question. Yes, we have had over 1,500 tenants across our 30 mall portfolio that have reached out. So that represents approximately 65% of our tenant population has asked for some sort of deferral, abatement, or reached out for some sort of relief during these times.
Okay. Well, that's pretty interesting. So that means you've been pretty busy across the last 6 weeks or so, huh?
Yeah. I joking with my wife. She thought that this would slow things down and it may be a little vacation. It's probably busier than I was pre-COVID at this point, just dealing with different things.
I'm sure. And what would you recommend right now for tenants in terms of communication with their landlords?
I would just recommend to be as transparent and open as possible. There are some tenants that aren't reaching out and have just not paid their rent. And from a landlord perspective, we're doing everything we can to work with these tenants. So I would just recommend an open line of communication, and generally that will allow us and other landlords, I feel like, to be a bit more receptive in some of the requests that they're asking.
Yeah. And when you've reached out to so if a tenant's not reaching out to you, do you reach out to them and start a conversation?
Yeah, we've approached it a couple different ways. For us, we were very focused on our top tenants across the broader portfolio and proactively reaching out to them. negotiate some sort of deferment of rent, but with the focus of getting cash in the door today and then deferring maybe 50% of that rent that we're not getting today over the next 6 to 18 months. But the ones that aren't, we are also keeping our legal stance intact and issuing notices of default. That doesn't mean we're going to necessarily exercise those options, but from a legal perspective, that's just the route that we decided to go.
Okay. And I know there's been a number of high-profile companies that have said, that just have come right out and said, I'm not paying. How do you approach that?
Yeah, it's been interesting. We thought higher profile, maybe better credit national tenants would be paying, but they have been sitting on the sidelines and kind of having a wait and see attitude. So a lot of it stays consistent, where we're trying to see what they can provide to us now. But I think issuing the notice of default is a good course of action. And then what I think they're waiting for is to understand the true impact that it's going to have on their business. And then once they have a better understanding of that and how long the malls will be closed, then they're going to assess what sort of abatement they're looking for. So there's not a lot we can do right now except for position ourselves to be ready for when those requests do come to us.
Right. Yeah, there really is no rule book for how this should go down.
Yeah.
There will be after this, but not right now.
Yeah.
In terms of stimulus money, I know this gets really complicated because it can impact both you and your tenants. So how have you approached the CARES Act as it relates to from both a landlord perspective and with your tenants?
Yeah, with our tenants, we've put a big emphasis on more of our permanent or our local and regional tenants, and having our team work with them to show them, how to apply for it, the benefits for it. It seemed like a lot of them didn't know that it was relatively easy. I know there's been some issues on the back end actually getting it funded, but we definitely wanted to make sure they know of these for the livelihood of their business, and then ultimately as a landlord, making sure they're viable, and then when they can come back and resurface and pay rent. But so definitely that's been the focus more on the temporary or local regional leasing. From our perspective, there hasn't been right now an allotted amount of money to the mall industry. I'd say the landlord side. I know the ICSC, which is the International Council of Shopping Centers, is going to be making a push to receive some funding in the future. But to date, as a landlord, we haven't really been the direct recipient of any of those funds.
Right. How about in terms of lenders? Have you done anything differently in terms of your relationship with your lenders as a result of everything that's happening?
Yeah, I'd say this is over the last 6 weeks where I've spent the majority of my time. As we've seen a rather low collection rate, just to put in perspective, about 20% of collections is what we've received to date versus, running in the 95 to 100 range. With that, as you can imagine, it puts a strain on our ability to pay operating expenses as well as our debt service obligations. So we are actively working with all of our lenders to either our first request, I guess, there were a couple things that we went out with. It's waiver or deferral of debt service completely over the next 6 months. If the lender had any restricted cash for tenant allowance payments or ordinary capital expenditures, we're asking them to release that for access to pay for some of the shortfall, as well as where necessary, roping in the ability to extend the loan, or those are more the shorter term, the near term expirations. We're going to take this as a time to extend the loan, as the refinancing markets are going to be relatively difficult to access capital.
Right. Do you have any tips that you would pass along right now to landlords that you think would be helpful?
Yeah, I guess first I wouldn't be just as I stated that the tenant should be in great communication and transparent with the landlord. I think the landlord and the lender need to have that very transparent communication. It's not saying that you don't need to pay your debt service. I think it's something that we've seen willingness and somebody on the other side of the line that understands how difficult it is right now, and they have a vested interest in making sure you're profitable. So I would definitely recommend to prepare a package, showing kind of your cash burn rate to give to your lender, and then start that dialogue. The other thing that we're preparing for is, as I mentioned, we think some of these larger retailers are going to come back and ask for longer term rent abatement versus just deferral of rent.
Right.
We're going to take this as an opportunity to potentially, grant that, but we're going to ask for something in return. So we're combing through all of our leases now to see if there's any restricted clauses in the leases that we would want to get altered at the same time they're going to be asking for some sort of rent reduction, some sort of quid pro quo here.
Yeah. Yeah. Have you started that, or is that something that comes next?
That's next. We've been preparing for that over the next couple weeks. I think that a lot of those discussions haven't started yet because they didn't know how long the properties were going to be closed for. I think now we're starting to see some properties reopen and have a path of what this may look like over the next 30 days. So now that as landlords, we're starting to communicate that, I think the retailers will understand when they're going to be able to reopen. And then subsequently, they're going to be reaching out to us to negotiate these terms.
That makes sense. Have you seen a difference from across the United States versus like how Florida versus California versus the Midwest is reacting in terms of payment?
No, I mean, across all of our portfolio, it's been pretty consistent. I mean, the only fluctuation we have is we have some open air or lifestyle centers that have a higher component of office tenants. In those properties, we're seeing it about 40 to 50% collection, and that's skewed upwards because we're collecting a lot more from our office tenants.
Right.
Other than that, yeah, it's not geographic in nature. It's not even quality of mall either, because we have some A malls and we have some B malls, and that is not right now what is driving retailers' payment either.
Right. Interesting. Okay. Well, we have some questions from the audience that we're going to go to. One of them is: have you considered revenue sharing or overage rent in terms of as kind of a new lease agreement in the future?
I'd say even pre-COVID, that had been a structure. That's a structure that's becoming more and more common in the retail sector. So definitely have seen that, and I will imagine that will continue. So that's just a percentage of sales. Typically, what we'll do though is only want to offer that for a couple of years, and then have a right to convert that into a more permanent income stream. So kind of after they've proved themselves, move that to a fixed income stream.
Right.
The only other places we've seen it is potential co-working deals, which are usually some sort of profit sharing, and some restaurant deals. We've been doing more percentage rent restaurant deals, I think, likely because we're focused on more of the chef-driven, more regional tenants, which the chefs that start these don't have the balance sheet that some of the national brands do. So with that, we're funding more of the capital, but we're also trying to capture more of the upside.
Right. Yeah, that makes sense. So at what point do you actually start talking about rent deferment and going from rent deferment to true rent abatement?
I think that discussion for us is going to start in May. we're going to push, as hard as we can to continue to just have them honor their contractual leasing obligation. But there's going to be that decision for each landlord, and not just us specifically, where they're going to have to weigh the fact of releasing that space, or potentially, coming to some sort of agreement with the respective tenant. And as I mentioned before, if we are going to make those subsidies, we want to make sure we're getting something in return. And I think that's, something important that landlords should be looking at in their leases right now to prepare for these conversations.
Yeah. Have you seen, or do you expect to see an upswing in payments now that some of that first wave and second wave of PPP funding is starting to come through?
It's an interesting question, because we're actually, what we're modeling today is about half the collections that we saw in April and May. So we're going to see a 50% reduction is what we think. I think that stems from a couple things. First, I think there were the people that paid in April, just it was auto pay, and it was set to pay, and they paid us whether it was accidental or not. There's people or tenants that realized that other tenants didn't pay, and landlords are willing to work with them. So now they're going to take that opportunity in month 2. There will be, those are really, I guess, the main opportunities, though.
Okay. We had another question from the group. Do you think that there's going to be the shift from working to remotely, will that become permanent? And how could this affect occupancy or lease rates in the next few years? That's a great question. People have tried it. They've seen the other side.
Yeah, it is interesting. I do think generally what's happening right now is going to impact the way of life for the next year or so. A grocery store here has temperature gauges when you walk in, and there's a screen that shows, what that person's temperature is when you walk through the door. It's going to change social habits, definitely. As we're reopening centers, we're cutting down the amount of common area seating, because we can't have that many people lingering, the amount of food court seating, putting traffic patterns in here. So, there isn't a lot of crossing over of people. So to answer the question, I think it's definitely going to change the way people shop. From a working perspective, I believe, just my experience with my team, I'm definitely going to be more open to people working from home, because we've had this 2-month period where we're trying it out and it's working. So I could see that lead to companies determining they may not need that regional office. They may need a smaller footprint because they know they can do it. And at this point, it's an overhead cost that they could look to eliminate and use software like this to communicate with people.
Right. So you touched on this just a little bit, but as states begin to open back up, there's still likely to be limits on the number of people that in a space, and this impacts everyone. But for restaurants in particular, their occupancy could be cut in half, maybe more. Do you think that this will become part of the negotiation for some of these tenants in the future?
Yeah, I think the restaurant industry, I think I saw yesterday in April, they've as an industry whole, they lost $50 billion. I think they're one of the largest hit industries here, even though a lot of our centers, and generally they're allowing carry out and pickup, it's still not the same volume they're used to. Right. So for us, as we think of reopening and risks of tenant groups, restaurants are definitely up there. As I mentioned, most of them aren't well capitalized, and so there's going to be, I think they're going to be looking to the landlord to help subsidize it in the interim. And that's a segment that we're very focused on for malls in general. So I think there will be a willingness for landlords to help there, because it is a great traffic driver for centers. And that's what we need, especially in this time.
Mm-hmm. So given the state of retail and the move towards legalization of marijuana across the states for both medical and recreational use, Would you consider leasing now to cannabis related companies? Because they seem to be doing very well right now.
Yeah. Yes, they are an essential business here in Illinois, so that they are open. This has come up quite a bit over the last couple of years since more states are legalizing it. As an organization right now, we do not, and it's more due to the lending and investor relationships and the fact that it's not federally regulated. That being said, I do think that this will create more of an opportunity to expand and have that industry, which is booming regardless, to enter in more kind of strip centers and stuff like that may have a different capital structure than we do.
Right. What about the concept of retail to go? And again, you kind of touched a little bit on this already, that there are things that are changing within that mall environment to be cognizant of traffic patterns, et cetera. So now customers are used to pulling up in a parking lot and having the retailer go out and give them food. Do you see this as something that could potentially expand in the future?
It's interesting. It could. I mean, there's a component that I'll go back to a comment my wife said 2 weeks ago when we went to go pick up pizza. Instead of having to go in and pick it up, somebody brought it to our window and
Nice, isn't it?
put it in there. So there's this additional convenience that I think inherently people will like. I feel like, though, at some point, people are going to shift back and want that social interaction that they're craving right now and want to go sit in restaurants. So what it has done is on the delivery side, I think it's really increased people's awareness of all the applications to get food delivered to you. And I see that to continue to grow. But yeah, I'm a believer that people like to kind of, be around others. And I think that we're going to get back to a norm, hopefully on the restaurant, and go sit in and enjoy a glass of wine and eat dinner,
And talk to each other.
Yes. Yeah.
Yeah, we have another question. As a heavy commercial portfolio, we're seeing a tremendous opportunities from a price and financing standpoint to grow our footprint. However, are large companies like yours ignoring or pausing on expansion, even with the potential deals out there, to see how this all plays out?
I would say it goes both ways. There are some operators there's limited operators today, or retailers, restaurants, entertainment venues, that are looking to expand because there is this stalemate going on right now of like what's to come. But we have had, we have 75% of our leasing pipeline that was in place before. It's still active conversations. 25% has been on hold. There are some properties, though, that we will put some capital projects on hold, and this is just a result of we don't know the future of the asset, and we need to make capital allocation decisions very strategically. So if we have any uncertainty of who's going to reopen, if an anchor is going to reopen or not, there may be some of that hesitancy today that we're going to wait until these reopen and then kind of restart any of the bigger remerchandising initiatives that we may have going on. Did I answer that one, or was there another piece of that one?
I think you mostly hit that one.
Okay.
So in terms of, you've mentioned one group already, but you mentioned ICSC, but are there other groups out there or places where you're going to get sources of information about what's happening next, what options are there, just a good sense of what's happening?
Yeah. I mean, first and foremost, this is my first webinar I've participated in, but I'm listening to any and every webinar that's out there hosted by banks, other landlords, et cetera. So I think these are a great source of information to really get the intel of what's happening live. Next is we are talking to our other property landlords, so the other public mall operators in the retail space, and understanding what they're doing, what tenants are saying to them, what they're seeing from the capital market side. So that to me is kind of the second avenue that we've had a good benefit of knowledge coming from. Third, the brokerage community, so investment brokers. Right now, transaction activity is pretty slow, but they're always talking to people. They're talking to other landlords, so they're also have a good amount of information. And then lastly is real estate kind of services platform. So there's a group that we use to outsource some of our underwriting of properties, and they do underwriting and appraisals for hundreds of properties across the country. So we talk to them also of how are you looking and forecasting out your revenue and expenses in light of what's going on now. So those are the main resources that I personally kind of tap into.
Okay, all right. So any other final thoughts before we close this up, Aaron?
No, I would say just keep the communication lines open, as I've said before, with your tenants, with your lenders, and make sure. I think that's the key here to getting things done. I think that we're starting to see things reopen on our side, which is good, and other properties. But we've got a way to come, but I'm optimistic. I think we'll see through it.
All right. Well, thank you everyone for stopping by. Our goal was really for everyone to pick up a couple of tips that you may not yet have considered that could have a positive impact on your organization's future. So thank you everyone, and now more than ever, stay safe and take care. Thank you.
Thank you.